In this video, I want to teach you a famous trading strategy that is called 930. Alright, this strategy is an intraday trading strategy, meaning it's suitable for scalping and day trading. Time frames like 5 minutes, 15 minutes, and 1 hour are perfect choices for this trading strategy. In this strategy, we need to add two exponential moving averages to our chart. So here we click on indicators and we search EMA, this one, moving average exponential, and we add two of this indicator. And then we need to change their settings. For one of the moving averages, we set the length at 9, and here in the style tab, we change the color to red. And then for the other moving average, we set the length of the moving average at 30. Here in the inputs tab, we set the length at 30. And the color blue is okay for this moving average. Everything is already set on the chart, and let's see how we trade based on this setup. Just make sure you watch this video until the end so you won't miss any important point about this trading strategy. This is a very easy trading strategy and you just need to pay attention to all the important points that I'm gonna explain. Unlike other moving average trading strategies that are usually based on the crossover of the two moving averages, this strategy is for trading based on pullbacks and entering in the current trend of the market. So this is a trend following strategy, providing high probability trades with minimum amount of risk. As I mentioned earlier, in this strategy, we don't use the crossovers, but instead we are going to take advantage of the area between the two moving averages to identify the pullbacks. The first step is to find out if the market is trending up or trending down. You can use price action analysis for this purpose, or you can add another indicator like MACD to identify trends, but by the help of these two moving averages that we have on the chart, we can simply identify trends of the market. The red line is an exponential moving average with length of 9, and the blue line is an exponential moving average with length of 30. When the red line is above the blue line, the market is trending up and we should look for buying opportunities. In other words, to find trading opportunities for opening a long position. Regarding the trend identification, it is also a good idea to analyze multiple time frames to find out what are the overall trend or major support and resistance levels in the market, so you will be sure that you are on the right side of the market. I have a complete guide on this subject. The link is also placed in the description, and I highly recommend you to watch it later so you can learn multiple time frame analysis. Alright, so here, since the shorter EMA is above the longer EMA, we can consider that we are in an uptrend. In this situation, we must wait for a candle that is closed below the 9-period EMA. This is a signal of pullback, and this candle is considered our trigger candle. Please pay attention that the trigger candle must remain above the blue line. If the trigger candle is closed below the 30-period EMA, the signal is not valid anymore. In the next step, we must mark the high of our trigger candle, and then we wait for the price to close above the high of our trigger candle, which happened here. Please pay attention that this closing candle must show buying pressure. In other words, the closing price of the candle should be near to high of the candle. So if the candle is a kind of like weak candle, a doji long upper shadow showing rejection of the higher prices, we don't enter a trade. The closing candle should not show indecision or bearish pressure. This is a long position setup and we wanted to show buying pressure. So here the signal is confirmed and we can enter a long position at this point when this new candle is opened. The stop loss should be placed below the low of the trigger candle unless the candles after that have lower low. So basically we set the stop loss below the previous swing low, and for the profit target, if you intend to take short-term profit, you can set it in advance at the level that makes risk to reward ratio equals 1.5, which is the safest option if you intend to quickly take your profit and get out of your position. But if you want to stay longer in your position, you can close your position based on the behavior of price action. One profit target would be when you get a candle closed below the 9-period EMA, and another one would be when you get a candle closed below the 30 EMA. This is if you want to take the risk and stay longer just in case if the trend is going to go higher and higher and you want to get the most out of your position if that's going to happen. Alright, now let me explain the setup for opening a short position. When the 9-period EMA is below the 30-period EMA, this shows that we are in a downtrend, and in this situation we must wait for a candle that is closed above the 9-period EMA. This is our trigger candle. We mark the low of the trigger candle and we wait for the price to be closed below this low, which happened here by the help of this candle. This closing candle must show selling pressure. In other words, it should not be a weak candle candle and the closing price of the candle should be near to low. This is a short position setup and we want this candle to show selling pressure. The signal here is confirmed and we can enter a short position at this point when this new candle is opened. The stop loss above the previous swing high and the profit target at 1.5 risk to reward ratio. One important point that I must mention here is that when you get a trigger candle and after that you get lots of candles above the red line and not crossing below the low of the trigger candle in this example, this is not a valid setup. If this is a pullback and the downtrend still in effect, the pullback should be ended quickly, not more than 4 or 5 candles after the trigger candle. When we have a situation like this shows weakness in the trend. In this case, weakness in this downtrend. This shows that the bears are weakening and the bulls are gaining strength and buyers were able to hold the price above the 9-period EMA and challenging this downtrend. As you can see, this downtrend ended and the market went flat and then the price turned to an uptrend. 930 is an easy strategy but very effective and accurate that is based on pullbacks in trends, so offering high probability trades. But please pay attention that this doesn't mean it can provide you 100% guaranteed signals. No, this is not possible in reality and losing positions are always part of the game and you need to manage your risk properly. There is a risk management strategy that is called 1% rule and it's a perfect choice for scalping and day trading. I have a complete guide on this. The link is also placed in the description and I highly recommend you to watch it because without a proper risk management strategy you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.